This is The Point, news from Noise, daily market call presented by Kattan Ferretti Financial. I'm your CEO, Brad Roth, and I look forward to having a daily discussion with you over the topics that we present in this note every single morning. So without further ado, The Point.
Morning, Cameron.
Good morning, sir.
All right, well, let's fire into the news so we have enough time to cover how boring that U.S. Open was. What do you think?
I think we should just get started then.
All right, fire away.
Oil has squeaked into positive territory after 4 weeks of declines, and crude oil production methods continued to boost output while demand continues to fall, sending crude oil lower yet. Goldman Sachs said if rig count holds, U.S. oil production would increase by 770,000 barrels per day this year. Japan's crude oil imports fell 13.5% in May from a year earlier, and India took in 4.2% less crude in May. In China, oil demand growth has been slowing for some time, albeit from record levels. The spread between the yields on 2-year and 10-year treasuries fell to 79 basis points after last week's disappointing consumer price and retail sales data. The spread is currently close to being the tightest it has been since 2007. Chicago Fed President Charles Evans and Fed Bank of New York President William Dudley are both due to speak in New York today. Vice Chair Stanley Fischer is up tomorrow. Then the list reads Eric Rosengren, Robert Kaplan, Jerome Powell, James Bullard, and Loretta Mester. The Fed's toughest component of bank stress tests has been removed, and all 34 of the largest U.S. banks will likely pass when results are revealed this week. Boeing Company said that its MAX 10 upgrade of the 737 workhorse is set to receive $30 billion in orders and commitments, while Airbus SE seeks to revive sales of its flagship Super Jumbo A380 with upgrades to the plane's efficiency. And Amazon is expected to start lowering its costs at Whole Foods to help change its overpriced image. Outside of the United States, miners and banks were the biggest winners as the Stoxx Europe 600 gained, and the euro was slightly stronger versus the U.S. dollar. The pound is slightly higher as Brexit discussions begin in Brussels, with many expecting a softer arrangement to be ironed out. The CAC 40, which is the stock market of France, jumped after President Emmanuel Macron's government claimed a historic majority in France's legislature, albeit amid a miserable turnout. In Asia, the focus is on the MSCI Incorporation decision on whether to include China A shares in its global indexes. Hong Kong stocks surged in advance of Tuesday's announcement. The $6.8 trillion onshore market is the world's second largest and accounts for 9% of global stock value, but it's been rejected for index inclusion 3 times by MSCI over issues including capital controls and long trading halts. China isn't likely to have a trade war with the U.S. this year, though 2018 is harder to predict, according to former Vice Commerce Minister Wei Jingwo. The Australian dollar dropped 0.1% after Moody's cut the long-term ratings on the country's 4 major banks. And lastly, the emerging market investors are again piling into the so-called BRIC nations, which includes Brazil, Russia, India, and China, pushing monthly inflows in stock prices to nearly 2-year highs. So, Bobby, if you were one of these Fed speakers, what would you have to say?
Well, I don't know that anybody would really want me to be on a Federal Reserve Board and be a Fed president. I'm pretty outspoken, and I think I'd really focus on the fact that they're going to get questions around what are we going to do about inflation being a little bit below their target even though we're raising interest rates. Well, go back to what I said last week. I'd focus very much on putting pressure on legislators to raise the minimum wage. If we don't have any wage inflation, that's not something the Fed can manufacture with their decisions on interest rates or their levels of interest rates. They can affect input prices, they can affect stock prices, they can affect debt levels, but wages, they can cool them off, I think, easier than they can start them up. But if there's no basis for what wages need to be as a set at the low end, then it's kind of impossible to set, what your standards are for wages on the high end, or there's no relevance, right? There's no nothing to compare it to from its onset into where we need wages to see higher wages. So that's kind of what I would focus on. Another thing I would focus on is, or that I think would be fun to talk about this morning, especially with what you were dealing with last week. I was just reading on Reuters that 49% of investors this year haven't checked their portfolios and haven't logged in.
Right.
Do you think they're all Schwab investors or what? I mean,
they must be. I mean, geez, they're driving me nuts. It's been weeks since I could get into my account. I'm ready to sue them.
Well, we got too much to do today for you to do that yet, but I'm right there with you, buddy. The other things to look at, I mean, right now are really just around keeping your pulse on as we keep hitting the higher end of the ranges, right? As we keep hitting the higher end of the Dow, as we keep our finger on the pulse, doing our homework every day. When are we starting to see signs? What are we going to look for to see signs that the economy is slowing? Well, this week there isn't much coming out, but next week we have GDP coming out, right? If you start to see information better than expected or worse than expected numbers next week, it's going to give us a whole lot of insight into earnings season. And this coming earnings season is when we'll be able to tell whether or not this market is topping or whether or not it's has a lot more room to run. So keep an eye for next week. It's probably not going to be too heavy of a week with not too much economic data, a lot of speakers, but next week is all the big data. So what about the U.S. Open, man? I was watching yesterday. I fell asleep probably 4 or 5 different times. I think my grandmother didn't think the course looked very nice, which is hilarious. But in general, man, it just doesn't have that thrive down the stretch anymore. I mean, even the Masters is like, you don't have like a Tiger-esque figure in there to like, start something up. I mean, both Rose and Garcia were battling to see who could lose the Masters, right?
Right.
I don't care what anyone says. That's what it felt like. There were some good shots, but yesterday was just like, one guy playing well and another bunch of other people falling apart.
Right. I mean, it was a good event. It was glad to see Brooks Koepka win, but that was not a U.S. Open. It didn't have the U.S. Open feel. The players are just too good now, and the USGA is trying to keep the scores down by putting in these courses that are like absurdly long and high fescue, and the players are still just tearing it apart. So hopefully, I see the next few years we're going to be going back to some old familiar faces. So hopefully these courses will get back to the real true U.S. Open feel and maybe a little higher scoring, and maybe all the good guys, Jason Day, Dustin Johnson, everyone battling out down 18 like we all want. So
yeah. Speaking of which, just a quick good luck and shout out to my buddy Dan Obremski, as he plays in the Frank Fuhrer Jr. today at the Field Club. So maybe we'll have to sneak over and watch some of that. Not today while it's raining, but we'll see what we can do to go out and support him the next couple of days. All right. Well, this has been The Point. Looking for news out of all this noise. And what's today's date, Cam?
June 19th.
For Monday, June 19th. We'll see you all tomorrow.